Welcome back, traders. Today we're diving into a fascinating journey of RJ, a seasoned market veteran whose trading story spans decades. From reading his first stock market book in high school to mastering complex strategies like SPX options trading, RJ has explored nearly every corner of the market. With a background in computer science, a master's in finance, and hands-on experience with everything from dividend investing to futures and options, he brings a wealth of knowledge and insight to the table. Get ready to take notes as we unpack RJ's evolution as a trader and invaluable lessons he's learned along the way. Yo, what is happening, guys? We are back with another episode of NOFOMO, the podcast. It is Woods, your host, and today we got a special guest with us, RJ, an extremely nice trader that I've met and gotten to know a little bit over the last few years. RJ, what is happening, brother? How you doing?
Oh man, I'm my voice is going to sound a little bassy because I'm just getting over getting sick. I'm just this COVID, man. But I've been trading every day, sick or not.
Man, that's how it goes, man. That's the game we in. You your own boss. Don't nobody tell you to show up for work, so you got to make the money. You got to make it.
That's right.
But man, I wanted to talk about your personal journey and motivation, man, because I know you've been through a nice roller coaster of different things that can give value to our listeners. So let's start by talking about how did you first get into day trading and what inspired you to pursue it more seriously?
Wow. I mean, I'm in my 50s, right? So I've had a long journey, and I really want to say that it started in high school. I read my very first stock market book in high school, right? So, and then I remember even then I was watching, I forget what it was. I don't know if it was CNBC or something like that. Just watching the ticker go across the screen. And I mean, this is back when they were trading in quarters and eighths and sixteenths as opposed to decimals. And, it was just fascinating to watch the ticker and watch things go up and down. And it's so different than today with DOMs and Bookmap and everything that goes. But just the amount of money changing hands every day was just fascinating.
Wow. So what were some of the biggest challenges that you faced early in your trading career?
Having enough money, like being funded, right? If you have a $10,000, $5,000 account and you lose $1,000, you just lost 10, 20% of your account. You have $100,000 account and you lose $1,000, that's 1% of your account, right? So there was always more fear in having a smaller account that you were going to lose it all. Like, oh, this one trade, if I don't close it now, I'm going to lose everything. And one of the things that, you have to protect against, you always have to have stops, right? But you have to protect against death by 1,000 cuts, right? If I stop out too early, then I'm not letting the trade kind of mature. So I think the biggest thing was fear of losing it all, fear of losing too much, fear of not being right. A lot of those things were kind of initial impediments.
Interesting. Can you describe a major turning point in your trading journey? Like, when did things start clicking for you?
That's a very good question. I don't know if it was just one day, but it's something that you're always learning, right? You're always listening to new things, reading new books, watching videos, kind of just, sitting there and trying to, journaling and learning from your own trades and every day. And I think that it's probably going to be when I read the book Best Loser Wins. And it's just, there's so many things in that book that you've heard 100 times, but the way that Tom put it all together, all in one place, and just kind of, somehow he won me over to the things I've heard 100 times. And that was the day that things really clicked and my confidence kind of jumped, right? It really changed it really increased my win rate. I would have to say, just that, it kind of took the fear away more. I don't know the best way to explain that.
It's like your aha moment.
It really was. And it wasn't, and there was nothing new in the book. I'd heard everything 100 times, but it was just the stories, the way that he put it, and kind of just combined everything together. It just really, really clicked. Like I finally believed what I was hearing.
Wow. So like I know that you're not one of these young traders out here, especially guys that focus on the flash. You're an older trader. So how do you balance trading how do you balance trading with your personal life, especially on the days with high market volatility?
Wow. So back when I was so I trade futures and I trade options. And back when I was first starting and moved to futures, I would spend 8 hours. Like I would spend every moment. I would spend it I was doing bonds back then, and I would you'd start trading at like 7:30, 8 a.m., and you'd go to 5:01. Like you would just sit there and just watch because bonds move slowly until they don't. Right. So you have to sit, wait for the move and and jump on board. And so then you're sitting there waiting for the move. And I mean, I wouldn't eat lunch. It was a horrible kind of work-life balance, if you will. Now I literally, and this was another transitional moment for me, was like being able to just wait until 10:30 and trade from 10:30 to maybe 12. Try to do 10 to 11:30, 10 to 12, that kind of area right there. And just call it a day, And so I've gone from 10, 11-hour days down to 2 hours, right? Over the years, I've honed my, how I trade. Right. I think the other biggest thing is patience, really, right?
Right.
And it's so funny, right? So the name of the podcast, right? FOMO, right? I was so fearful I was going to miss the big move. Oh, if I don't sit there and watch everything right now, I'm going to miss it. There's no trades for me if I don't sit here. If I'm 1 minute late, all that kind of stuff. It's just literally patience and just understanding that maybe you shouldn't trade 9:30 to 10. Right. That's, I don't have to catch all the big moves.
Right.
It's there'll be something to trade during your time frame when things settle down a little bit.
So it's finding your kill zones that work for you.
Yeah. The market you can break the market up into time slots. Excuse me.
Right.
And kind of that 10:30 to 11:30, right? So remember, 11:30 London closes at 11:30, and then you're going into the lunchtime hour. So the 9:30 open, right? So this is all New York time. 9:30 open till between 10 and 10:30. You're setting up that initial balance, that kind of like all that rush and a huge volatility at the beginning when the market opens, and then the market kind of finds its balance, and then you go until 11:30. Now a whole lot of volume drops off when London closes. And so now, in a lot of, in theory, it used to be anyways, the big boys in New York go to lunch. And you'll get, often big retracements on low volume as you go into the lunchtime hour. So that can be a little more erratic, and then you go into 1:00 and, maybe people coming back from lunch, maybe the big boys turning back on sitting down at their, computers again. And then, 2:00 is kind of dead. And then 3:00 power hour, right? Where things kind of pick up again. And sometimes you can actually see when kind of the market kicks in. Like it used to be for bonds, between like 7:55 and 8:05, you'll get often, not always, you'll get a nice retracement from the overnight session. So it's just, there's certain time frames, and because that used to be when the bond pits opened, I think like at 8:15, and that's just kind of carried through into like the electronic days, of kind of when people turn on their algos, if you will. And people start sitting down for bonds like at 8 a.m. So that's kind of a good time for bonds, is kind of like that 8 a.m. to pre-market, like 8 to 9. Yeah.
Interesting. So let's talk about your trade strategies and practices. What's your primary trading strategy and how did you develop it?
That's a really good question. So it's kind of one of those things that a common phrase that people say is there's nothing more important than screen time. Like nothing will teach you more about the market than sitting and watching the market, right? So, while I kind of criticize myself for staring at the market for 10, 11 hours a day, you kind of need that up front, right? You can't just sit down on your first day of not knowing anything about the markets and trade for half hour and walk away with 10 grand. You really have to sit and watch the market, and it becomes a catalog of I've seen that before, right? As opposed to that's new, right? You get less of those moments and more of the former, where you're kind of like, oh, I've seen this before. I've seen this setup before. I've seen this happen before. And one of the biggest problems or rabbit holes that people can do is change what they're looking at. Like, oh, this doesn't work. I have to change this. Oh, I have to go from tick to Renko. Oh, I have to go now I have to do range. Now I have to do footprints. Now I have to go back to tick charts. And, oh, now I have to change the ticks. Oh, now I got to do 5-minute charts. And now I'm doing 2, 5, 15-minute multi-time frame analysis, right? You're not getting any experience. You're not training your brain on one thing. Right. So I've been looking at ES on a 512 tick chart for 12 years. All right. That may not be the best chart to look at ES. Some people may say, and I've been asked before, why tick and not volume? Right. Because what's the difference between a tick chart and a volume chart? A tick chart is trades. A volume chart is volume, right? So they kind of sound the same, except when one trade can be 100 lot and the next trade can be a 1 lot, and that's 2 ticks because they were 2 different trades. And then if that same 100 lot pushed through, but it pushed through in like 4 segments of 25. Now that's 4 ticks. And it would be better really if I were to do it all over again to do volume charts, right? Because 1,000 lots is 1,000 lots, right? It's
right.
and that's why volume is a little bit better than tick. But I've trained myself on tick charts, and that's what I'm used to. So the experience of 12 years of watching the market move on a 512 ES tick chart is something I can trade on, right? I've seen the setups. I've seen what's going on. I know what to expect on that chart, much more so than, on a regular, 1 minute, 2 minute, 5 minute chart. And the good thing about tick charts is that during a normal, like everyday regular movement of the market, it really can be a time-based chart. All right. In that, there's a certain amount of time that's going to fill your screen, fill your chart. Like maybe your Zoom, maybe like a half hour, maybe 45 minutes can show on, your screen at once.
Right.
And when a lot of people are saying that, you want momentum, right? You want a big move with a lot of volume. And so normally, like on a regular chart, you would see kind of a larger candle, and then you have the volume chart underneath it, and then you have to look down and you see a growing volume candle as well, right? Because you want big volume on a big move. Excuse me. Well, what happens on a tick chart? On a tick chart, when a lot of volume happens, it prints a lot of candles all at once. So you're sitting there watching it, and instead of waiting for a new candle, waiting 120 seconds for a new candle, you just have like 4, 5, 6 new candles that print all at once. And you're like, well, that looks like momentum, right?
Right.
And it's all built on one chart. It's not 2 different charts that I have to look, is volume also going up, with this rise in price? I just see it's just like, going up a roller coaster. It's just printing quickly and up or quickly and down. And, so you have to understand that that's momentum, right? That's a high volume move at that point in time when you print a lot of candles on a tick chart or a volume chart all at once.
So tell me, how do you approach risk management in your trades? Do you have a specific system for cutting your losses?
So I do a dollar amount. I've had a lot of criticism from people like, "Oh, you can't do that. You have to put your stop at a certain number of ticks, or you have to, how can you repeat that if how can that be repeatable, trade to trade if you always do?" Because I ladder in, right? So we haven't talked about that yet, but it goes back to, you can never be perfect. You can never call anything exact.
Right.
And so, people call it playing a range. Some people call it dollar cost averaging. Even if you have your entries like 3 ticks apart or something like that, oh, you're averaging down. That's a cardinal sin. You can't do that. But playing a range or filling kind of in a small range, not like 50 points on ES or anything like that, but within a range, build your position and have enough patience to let your thesis play itself out. And so I would say that, excuse me.
No problem.
I would say that the risk management is going to be a dollar figure for me.
Right.
And, it's kind of like, where where it's painful, right?
Mm-hmm.
Because you're going to oftentimes have different amount at risk on different trades, right? If you're range bound on ES and the market's moving real slow, and you're up and back and forth in a 10-point range or something like that, maybe you put a little heavier weight on in order to have a little more significance for each trade. If you're moving like it's been in the past few weeks now, if you're moving literally 20, 30, 40-point moves, you don't want as much risk on, right? Because you don't want to go against you. Or you want to be able to, within your stop loss, and my stop loss is a dollar figure, not a number of ticks, right? So the smaller the trade in a more volatile market means the wider my actual stop loss can be if measured in ticks before I hit that dollar stop loss, right? Because that's moving more wildly, right? I'm really not going to nail the entry, and so I kind of have to get into a little bit of drawdown before it kind of goes my way. And that is that kind of ability to not be death by a thousand cuts, right? Not to panic when it's going against you a little bit, but to have a pre-planned measure on what to close your trade at, and to be able to be okay with that, right? You don't want to be down 10,000 like, oh, I wish I hadn't have done that, right? I mean, you need to set your stop loss. But so let's say it's $1,000, and I put on one ES. I'm going to be able to have more ticks than if I did 5 ES, and I'm still doing that $1,000, right?
Right.
The wiggle room I'm going to have available will be much bigger the smaller that I trade. And I trade MES as well. And laddering in with MES is, I know the commissions are higher, but laddering in with MES is really a good way to go. Because, I'm not trading, 20, 30 ES or anything like that. There's a guy on YouTube that I watch, trades like 30 ES, right? So I'm like, well, you're going to make if you can scale into that, that's great, right? But I would rather trade a little bit smaller, and have more of a wiggle room, right? Because you're trading 30 ES, you got to have a pretty tight stop loss. So you're going to be down a whole lot of money real quick. But if you're, starting with 2, 3, 4 MES, and build up to say 20 MES, it's really only 2 ES. 20 sounds so big, right? But it's really only 2 ES. And now you can actually make some good profits on that. But you have to respect your stop loss though.
That's interesting, man, because I tend to risk a dollar amount as well. It's not, I don't draw to a percentage or a tick. It's well I do try to stay within the percentage, but I don't draw to a tick amount. It's just a dollar amount that I set every time. That's interesting, man. So tell me, can you walk us through your daily trading routine? What does your typical day look like for you?
That's a good question. So my wife and I both work from home, and so I'm usually up first. always have. I'm a big breakfast kind of guy, and I actually cook my wife breakfast as she gets up and take care of the dogs and make sure everything is kind of set in the house, and kind of roll into my office at around 10 o'clock, set everything up. Kind of, I have everything, when I open my trading software, kind of goes to, fill out my screens and kind of absorb everything, look at the news. I've probably been looking at the news while I'm eating breakfast. And then try to wait till 10:30. Sometimes I trade before 10:30. And just kind of jump right in.
So, like, how do you decide when to enter or exit trades? Like, are there what indicators or signals do you rely on the most?
So, okay. I have a very clean chart, if you will. I use VWAP with standard deviations, and I use Heikin Ashi tick charts. So literally, so Heikin Ashi is a candle, but people also call it an indicator. And you kind of just wait, red to go green and green to go red. I also have it's like it's not Bookmap, but it's like Bookmap, right? It's the heat chart for the DOM, and so I kind of also have that. So Heikin Ashi tick charts, VWAP, and that kind of Bookmap.
So let's get into emotional and psychological aspect of things. What role does emotional control play in your trading? How do you manage stress? How do you manage stress and anxiety during losing streaks?
So I think the best thing that helps me is confidence that I can win, right? So it's like, well, if I lose today, that's okay because I'll win tomorrow. All right. It's not like, oh my God, I lost. I'm a bad person. I'm a bad trader. I'm a loser. I'm going to lose it all. I'm going to lose my house. I'm going to lose my wife. I'm going to lose everything because I lost $1,000 today on a trade. I'm no good, right? You can't have any of those thoughts, right? You can just say, hey, the style that I trade works for me. It's worked in the past. It's worked for years. Today was just not my day. Tomorrow is a winning day. And it's some of the guys I watch, they talk about 80% of the days are the days that you should be trading, and 20% of the days are, you should have stayed out. Even if you were trading, you shouldn't have. So you just have to kind of find your pattern, right? Find your method that you're confident in. And just know that sometimes your method and the market don't mesh that day. Doesn't mean that your method of trading is bad. Just means that it wasn't meant for the type of market that happened that day. You just have to wait for the next day and hope that your method of trading matches what the market is handing up today.
So you want to live to fight another day.
Absolutely. Right. Right. If you have no money left in your account, it's back to McDonald's or Wendy's, as they say on Wall Street.
So tell me, Have you ever experienced significant losses, and how did you mentally recover and adjust? What's your approach?
So that's a very good question. So significant. So as we were talking about account size, a significant loss has changed over the times, right? You
Mm-hmm.
know, when I first started, a significant loss was literally, you know, down $1,000 in bonds on a $15,000 account,
Mm.
and literally your heart starts racing. You think you're going to throw up, right? I mean, it's you really, it really messes with you, right?
Mm.
Um, you know, uh, I've now, you know, I've been down in drawdown much more significantly than $1,000,
Mm-hmm.
and it doesn't affect me hardly at all for a couple of reasons. You know, a little bit is a larger account size,
Mm-hmm.
but it's also kind of the confidence in my system, right?
Right.
You know, on most days, what I do works, and I just have to kind of be calm enough to kind of and patient enough to let everything kind of play out.
So tell me, and through all this, how do you stay disciplined and sticking to your trading plan, especially when markets are unpredictable?
That's a good question. I have to think about that for a second. I think it's years of doing the wrong thing,
Mm-hmm.
right? That
Trial and error.
yeah, it's just kind of like it kind of goes back to experience and screen time
Uh-huh.
and kind of pattern recognition.
Hmm.
And it's not, you know, some of it's not stuff you can put into an algo. Obviously, there are algos that work and you know quants and all that kind of fun stuff. But for me, it's just kind of visual pattern recognition on charts, on the DOM, on the book map, and just kind of knowing when it's the right time to trade. You know, waiting that first half hour or hour after the market opens to see, you know, did the market fall 50 points at open, or has it been in a 10-point range, right? I mean, just kind of knowing what to expect, knowing it just you kind of need a kind of a history in your brain of what the market's done in the past,
Mm-hmm.
right? And to have seen enough crazy days, to have seen enough calm, range bound days, to know what happens when news hits. Back when Donald Trump was president, right? You know, the old Trump
Mm-hmm.
tweets.
Right.
You know, I've
Cafe.
been caught. I've been caught in those before. You're like, how come the market just dumped 30 points for no reason? And then, you know, 5 minutes later, like, oh, Donald Trump just tweeted, you know, X, Y, or Z. You know, those were kind of crazy and unpredictable. All right, how can you plan for that? You can't. Uh, excuse me. So you just kind of have to be calm, really. Just kind of not panic. Trade small, right?
Mm-hmm.
When your stomach tells you that you're too big, right?
Mm-hmm.
If you can't handle the drawdown, if you get sick, if you get panicked, if you start sweating, right? All those things have happened to me before. All right, we've all traded too large. We've all held on to losers more than we should have.
Mm-hmm.
You know, all wish that, you know, oh, if I'd only closed this when it was, you know, minus 100, boy, would today be a different day. So it's I can't say it enough. Really, it's screen time and experience.
Right.
really led me to kind of where I am today, which is, a patient, calm, confident trader.
So let's transition to talking about your learning and growth. What books, courses, or resources have had the biggest impact on your trading journey?
So I'm going to go back to Biggest Loser Wins, or Best Loser Wins. Sorry, Biggest Loser, Best Loser Wins. That was a significant book, but I don't think that if it had been the first book that I ever read, that it would have held the same significance.
Okay.
It wasn't until I was ready to receive that message did it kind of click and go through for me. But quite frankly, I'm a voracious reader.
And that's the book by Tom Hogarth, right?
Hogarth. Yeah.
Okay.
Yes. So
I'm sorry.
no, that's all right. The number of books I've read is definitely in the hundreds over the years, and I've had such a varied trading career. I started in my teens and 20s trading drips, right? Those dividend reinvestment plans. Because you have $100 here, a couple $100 there, and you put it into like a bank stock or something like that. Or some blue chip stock like McDonald's and stuff like that. And so you kind of do that to just you kind of need participation, right? Nothing's real until you have money at play, right? Even if it's like $500 in SPY or something like that, because it makes you interested enough in what's going on that you're paying attention, right? Because when you're in sim, you may be looking at the market, but you're not invested. You're not emotionally invested in what's going on. So when you have real money at play, you are emotionally invested. You are glued to that, especially when if you have a $5,000 account and that's excuse me, the last 5,000 that you have and you're trading with it, they always say, be prepared to lose anything that you invest.
Right.
So, don't trade your rent money and stuff like that. But if that's all the money that you have, excuse me, if that's all the money that you have, that's really important to you, and if you start trading with that, boy, you are really going to be invested and remember what you're trading and what happened that day in the market. But so started with stocks, moved to options. I am so sorry.
No problem.
And for years, I did the tasty trade, selling short options. And there's a lot that you can learn from that. A lot you can learn about the market. A lot you can learn about how things move, because there are options on futures as well. Right? But you can't do a lot of that stuff on small accounts. I'm so sorry, buddy.
No problem, man. If you need to take a second, it's fine.
So if we talk about options, that's a good way. So options give you leverage, right? So leverage is always the thing that can kill you. The one thing about trading stock is that as long as you never go into your margin, you can never lose more than your account, right? Once you move into a leverage product, say like futures, Futures are highly leveraged. And I actually knew a guy who had started trading. Well, he worked for one of the brokers, and he actually started trading futures with a brokerage account for where he worked, and he lost $100,000 of money that he didn't have. And so they were taking it out of his paycheck until he paid it back. Right. So he was literally like an indentured servant to this place because he had lost so much money in futures. Right. So, you can trade like $1 million of nominal value in futures with like $5,000. It's crazy the amount of leverage that they can give you, and that's why futures. So many people love futures is because of that leverage. You can earn like $1,000 in 10 minutes, right?
Wow.
It's like, oh my God, I can earn so much money, right? Yeah, you could lose that in 10 minutes too, right? So if you have a $5,000 account in futures, you could be bust in 30 minutes, right? So that's why you have to trade small, right? Even with leverage, you need to trade small. Have your stop losses, and whether it's a tick value or whether it is a dollar amount, you need to be able to exist the next day, right? And people are like, oh, well, that's okay. I've been told that the brokerage will flatten me out, like kind of stop out my trade if I ever hit zero. Until they don't, right?
Right.
And
right.
literally, you're negative $10,000 in your account before your account auto liquidates in a real brokerage, and then you get the phone call and say, "Hey, please deposit $10,000."
Wow.
So you got to be very careful when you're trading on a real money account. When you're trading with leverage.
That's interesting, man. Like, so this is something that I've been trying to be on top of myself this year about. Let's talk about how important journaling your trades and what insights have you gained from keeping your trading journal?
So it's one of those things about when you're in high school, and taking the process of taking notes reinforces the concept you're taking notes about. Excuse me.
No
Even if you never go back and read that again, the process of putting words to everything, how you felt, how the market was doing, how you stuck to your trade plan or varied from your plan, how you had maybe identified a new pattern, like any of those things that you're kind of writing down. I mean, I can still see some of my recent notes in my head, like what I was writing from days ago. Because it was a significant trade, I made a good amount of money or I lost more than I should, right? Something like that was significant. I wrote it down, I journaled it, and by doing so, I kind of cemented it in my head a little more than just having lived it. All right. It's kind of that immediate review of, and I do it at the end of the day. I don't journal as I trade. I journal at the end of the day. So, it's still fresh, but I'm not interrupting my trading day by journaling each trade as it happens. But at the end of the day, I'll go back and journal my trades, and the process of writing it down is that process of reinforcement.
So like, tell me, with journaling, a lot of it's tedious work, and a lot of people don't like to fool with it. And then you have demo trading, which is you're shooting in the gym, which a lot of people hate. So tell me, what are your views on demo trading versus live trading when it comes to refining your strategy?
So here's all right. So first of all, sim trading, demo trading is really good to help you learn the platform, right? There are some easy platforms. There were some hard platforms. There are some powerful platforms, but there are certain things that you need to kind of learn, right? How do I enter a trade? How do I close a trade? How do I adjust a trade? How do I replace a limit order with a different limit order, right? All these things are not what you want to be learning when there's real money on the table.
Right.
So I think that for learning your platform, I think sim trading is critical. However, I remember years and years ago, I was in sim. I was on Thinkorswim, and I was in demo mode, and I put a trade on silver futures, and I held it for like a week or a week and a half, and came out the other end, and I had made $1,500 on a one lot or something like that in silver. Wow. And I had sent the trade to one of my trading buddies, and he goes, "This is bullshit." Oh, I'm sorry. Am I allowed to swear?
Oh, it's all good.
He goes, "That's bullshit." He goes, "You'd have never held a silver trade for a week, right? You would have never went to sleep with a silver trade on, And he's right. When I went back and thought about it, and when I have traded silver live, it's like, you don't let silver, like SI, like actual big silver, is $5,000 for every $1 movement in silver. Right. And recently, with the volatility of silver, you can move $1 in a day, right? So you don't want a day to go by and all of a sudden you're down $5,000 on a one lot, right? I mean, that's a lot of money, right? So you would never, even if it was 2 a.m, you would not be sleeping with a silver trade open and live, on your platform. So he was right? In sim, it didn't matter, right? You can lose the $100,000 and reset your sim balance.
Right.
And he's right. You would never have held a silver trade for a week. So sim's only as good as you make it, right? So 100% critical for learning your platform, because you never want to not know what to do on your platform when real money is at stake. But I don't think true experience happens until there's real money at play.
So that emotional investment.
Absolutely.
Right. So like, how do you continuously improve and adapt your strategy and change your market conditions?
Wow. So I think that as you kind of get experience and kind of grow, you have different strategies for different market conditions. And I kind of alluded to this earlier, where on a range bound day, I trade a little bit higher in size, and on a volatile day, you trade smaller. And if you're used to like a high momentum dip and then a rebound, right? If you've seen those happen enough times, then a high momentum dip of 10 points in ES that's going to rebound 5, 6, 7 points. That's great, right? But a high momentum dip of 50 points might rebound 10, 20, 30 points, right? So it's the same move, but it's just bigger, right?
Right.
So you kind of have to adjust. You kind of have to be flexible, right?
Right.
You kind of, it's almost kind of like going with the flow, or just kind of like riding a skateboard where you're kind of, 1,000 micro adjustments every minute in order to stay on the board. You just kind of have to kind of be able to read what's going on, accept what the market is showing you, and have the patience to stay out when that's the right thing to do, because not trading is also a trade, and just kind of accepting what's in front of you, and just kind of constantly adjusting.
So let's go into broader insights on the industry. What are your thoughts on the current state of the market? Like, where do you see trading opportunities today?
Well, right now we're heading into the election of 2024. And so I think we're going to see increased volatility as we lead up to the election. And I guess it depends on who gets into office, on what's going to happen next. I just heard someone on the news talking about what happened when Donald Trump got elected the first time, 2016. Excuse me. The market dipped like overnight. I think someone said 1,000 points or something, like some large number. And then it was up the same thing like the next day. Like, it was this, significant volatility when that happened. You'll probably see less of that this time, because both candidates are a known quantity. But I think you'll see some movement. Some of it. So let's talk for a second about why the market moves, right? So I have one of my college degrees is a degree in finance, right? So when I took classes in that, they were all about an elastic market, and an elastic market means that when you hear the news, the market is already adjusted to the news before the news came out. And obviously that's not 100% true, but that's kind of the concept. Like, by the time you hear the news, it's too late to trade the news. That's kind of the concept. But what happens is that there are certain expectations in the market, and the market will react to those expectations. And the big moves in the market is when reality does not match those expectations, right? So talk about FOMC, when the Fed sets their interest rates every quarter, however often they do that. Let's say the market thought they were going to move 25 basis points, right? So the market, but weeks or days before the meeting, the market will rise and fall to the level of that 25 basis point adjustment. If on the day of the meeting they announce a 50 basis point adjustment, the markets will go crazy because they had already baked in 25 basis points. Now, let's say 25 basis points, that's kind of small. Let's say it's 100 basis points. It doesn't matter. If the market had assumed or had already expected 100 basis points. So sorry, buddy. Okay. If the market had already anticipated 100 basis point adjustment, and they announce 100 basis point adjustment, which sounds really large, the market won't move at all because expectations match reality, right? It's when it doesn't, right? So for years, I traded earnings. I traded options on earnings. And I made some good money. Also had some nice, significant losing days as well. But it was never earnings that moved the market, right? Tesla beat earnings. They earned, $1 a share as opposed to the 92 cents a share that was expected. And the market will move like, a little bit, like, 30 cents in Tesla or something like that. What moves stock prices on an earnings announcement is not the earnings number, it's the forward projection numbers. It's what the yearly estimate for the next year, right? Or what they call like the target. So if Home Depot says, "Hey, we had estimated that we were going to make 500 million next year, and we're going to raise that to 600 million that we plan on making next year." That estimate change, that target change for the next year that they announce, and they announce it with earnings. So it's on the same earnings call. When they announce that, Home Depot will go through the roof. It's not because of the earnings number. It's because of that the target changed. The expectations changed. So recently, Tesla just went up 20% the other day on the earnings call. It wasn't because they made more earnings. It was because of the change in the target of expectations in the future of what Elon Musk said, I think, about the robo-taxis, about what they expected to gain when everything was released. So now, if on the next earnings call he goes, "Oh, we overestimated that and we're reducing our target," Tesla's going to fall through the floor, right? And it doesn't have anything to do with what was the earnings for that last quarter. It had to do with that change in target. So everything in the market almost everything is about expectations matching reality. And when they don't match is when markets move.
So this is something that I think you would have a value opinion on because of your years of experience. How has trading evolved over the years, and how do you see it changing in the next decade?
Wow. I didn't expect that question. Let's see. So, I mean, literally when I started, when I started with the dividend reinvestment plans, it was literally by mail. You sent in a check, and with I want, because you weren't buying whole shares. You were buying 0.16425 shares of $100 stock, right? So you'd send in your $150 check with a form with, please buy $100 worth of this stock or something like that. And liquidation was the same way. You had to kind of send mail in order to, sell those stocks.
Wow.
Because, if you were trading on a real system, you had to trade in hundreds, lots of a stock, right? So, if you didn't have enough money to trade in 100 lot of something, you couldn't really trade back then. Now you can trade single shares of any stock, and now it's for free, right? Because before there were always commissions, right? Every stock trade was a commission. Now stock trading is essentially free. So you can, capture 1 cent move in SPY and, get to keep that dollar. So I've gone from paper to electronic trading, so that's been significant. Where is it going? I don't know. I think Robin Hood just started trading futures, right? So you're going to get more people with access to those, unfortunately, higher leverage markets, and so I think it's been. And then with all the crypto, right? Because you can day trade crypto all day long, and then forex, right? You trade forex. So forex is the the banks make the money off the spreads, not the commissions. So they're still making money, but it's not. You don't kind of see it, if you will. You don't. There's not a separate line that says commissions.
What's crazy, man, is something that I seen the other day that really blew my mind is footprint charts on TradingView.
Oh yeah, so I think TradingView is. I have an account as well, and actually, that's the quickest way to bring up, because you don't have to log in. Like once you're logged in, you're logged in.
Right.
So I just click on it on my phone, and poof, I have instant charts. As opposed to like all my brokerage accounts, even though I have phone apps, I have to like sit there and log in and do this, that, the other, because there's so much more functionality on a brokerage. That TradingView is very very useful, and I don't use it as much in the social media aspects, or even in all the 10,000 indicators that you can apply to your charts.
Right.
I just use it for very quick, convenient access to a lot of charts. And if I want to see something, like if I'm trading NQ off an ES chart, which is something that I do, because NQ moves so wildly, but it's usually in such tandem with ES that you can often trade NQ off an ES chart. There are times where they go different directions, but it's not very often. And if you're trading on a kind of more of a macro scale, then you can actually do it. And so if I have NQ pulled up on my brokerage, but I want to look at the ES chart, then I'll switch over to TradingView to look at ES, and then go back to my brokerage to trade off my phone, which I don't recommend beginners do. You should always trade at your desktop. Phone trading is dangerous, right? Because you're not seeing the whole picture of what's going on. You're certainly not looking at multiple time frames at once on your phone. And a lot of the software, I like tick charts and like I said, volume charts. Those aren't really reproducible that often on phone apps. So when I'm trading off the phone, I'm not really using to my advantage all the 12 years of trading off tick charts, because I'm not looking at a tick chart when I'm looking at my phone.
So let's get into, what are some common misconceptions about day trading that you think should be cleared up?
That you can make $1 million overnight. That you can reproduce everything you see on YouTube.
Yep.
Some of the other misconceptions. You can make a living out of it. I mean, you really can, but it's taken me years. It really has. It's because you don't walk in on day one with the experience. You need to look at the charts and knows what is going on. One example I had is I just started some new trading software. I had a brand new monitor on my computer. It was nice and big, and I set up my screen with like 6 or 7 different DOMs, right? So different trading tickers, and I had silver, I had gold, I had 2 different bonds on there. I had ES, I had NQ, and I had them all across the screen. And I was trading in a live account. And so I had them all up on the screen and I'm watching everything. And I had little charts for everything. I had the DOM, and then I had a little account window that showed plus or minus, for the day or whatever. And I was sitting there looking at it, and I was literally sweating.
Oh man.
I was so anxious, not anxious as an eager, but anxious as an anxiety. I was literally freaking out because my brain could not handle all of that information at once. I had too many tickers. I had too many charts. I had too many DOMs going up and down. There was real money at risk, right? I'm emotionally invested, and I was over invested, right? I didn't, and not that I had trades open on all the windows. Even completely flat, I was freaking out just by looking at all that information. Now I can trade 10 different DOMs on my screen at once, and I'm cool as a cucumber, right? So that's something that you kind of have to work into, right? I mean, you have to build your confidence. You have to, be okay with understanding what's going on. You have to kind of have those kind of replays in your mind of, hey, this is what the market, I've seen this before. It's not anxiety producing anymore. Right. So, why I even thought, 10 years ago that I could trade multiple DOMs, multiple products at the same time, because you see those, like the professional traders do it, right? You see videos on Axia futures and things like that.
Right.
And they got like 10, 12 DOMs across their screen. They got charts galore. And, they're just whipping 10, 20 lots around. And I mean, it's crazy. I've seen a video where they made over $100,000 in probably 5 minutes.
Goodness gracious.
On a news announcement. Right? But I mean, the size they're trading is crazy. And the experience and confidence they have to throw that weight around is immense, right? I mean, you don't do that on day one of trading. You're literally trading one MES, and that's your only chart you have on the screen, and you're in a room, you're in a sound blocked room with no outside influences going on.
Right.
Now I could have like the bird chirping, the dog barking, the wife yelling at me, and like, hey, I'll be out in a minute. It's much different now, experience now than it was at the beginning.
Indeed. Man, so like I know we have some possible new traders, people that are on the outside looking in. So that will be listening to the podcast. Now, what advice would you give someone just starting their day trading journey?
Wow, I'd say read everything you can, learn what you can about the market, right? That you're going to trade. If you want to trade gold, but learn about gold. What moves gold? Why Does gold mining take effect? What about is there something that's called a flight to safety for gold? Right, when people are scared, do they want to invest in gold or do they put their money in bonds? Is there, does gold and oil have a correlation? Right. What happens when there's geopolitical issues? How does that affect gold? All right. So first learn your platform, right? So trading sim to learn your platform, right? If you need to put a trade on in a panic, that is not the time to be, emailing support trying to figure out how to get out of a trade. You want to have that down before you ever, risk a dollar. But learn about money, right? Learn about banking, learn about money. Start listening to the news, financial news, learn about geopolitics, right? So the war between Israel and Iran, what's that doing? That's affecting oil prices. Every time there's a new hit, every time there's a new strike, oil goes up or down, right? Because they're worried about the stability of the Middle East region, and what that was going to do for OPEC and oil prices, right? So, Bitcoin as well, right? How does Bitcoin affect other commodities?
Right.
If Bitcoins fall, does that affect gold at all? Or is it inverse? People are selling their gold and going into Bitcoin, or maybe they're selling their Bitcoin and going back into gold. Or is it that they're fleeing the stock market and going into gold and Bitcoin, right? So what is it that affects the market that you're trading? Be aware of macro news issues about what's going on in the world around you, and learn about how the stock market works, right? Auction market theory, and options as well. So we didn't talk a lot about options, but sometimes you have to understand that there's more to. So ES is interesting, right? Or NQ. Let's say NQ. So Tesla's in NQ, right? So in Apple, right? If there's a huge move in Apple or Tesla that day, it's going to by itself move NQ, right? So Tesla's earnings, and their announcements at 4:00 or whatever like that moves the market at 4:00. Often because the futures market is open till 5, so the futures market can often capture that move, right? So there's technical analysis, fundamental analysis, and just kind of news and volatility, right? You can have there are options. So you have ES, right, which is the future. ES is based on what people think the future value of SPX is. SPX is the index of the S&P 500. So the SPX is what's called spot, right? It's what's happening today. Futures is what people think is going to happen a month, 2 months, 3 months from now. It's like, oh, we think the price of SPX is going to be this by December 20th. All right. So the December contract of ES. But the SPX is what is today. But the SPX itself is just a basket of stocks, and it's weighted, right? So it might be Tesla times 4.2 or something like that, right? So the SPX is based on individual stocks. So if you have a big stock move a lot, it's going to move the SPX. The SPX moving is going to move ES, the futures contract. And there are options on Tesla and Apple. There are options on SPX, and there are options on ES, right? So you may be looking at a DOM for a depth of market, trading DOM for ES, and you're applying all your fun technical analysis to that chart. But a large options trade on Tesla or Apple, or a large options trade on SPX or SPY or VOO, right, or any of the other index ones, can actually move the market, and can move what you're looking at for no apparent reason at all. You're like, oh, well, this pattern should, do this, and technical analysis, it should go up by 6 points, next, and it falls by 20, right? And that's why it's always important to stay flexible. You need to have stop losses, but they shouldn't be too tight, because if the wiggle of the market is going to knock you out, your stop's too tight. So what I would suggest is to lower your trade volume. If you're trading 1 ES, move to 5 MES or 3 MES, and widen your stop a little bit to kind of accept that wiggle a little bit more. You're going to lose. If you hit your stop, it's going to be the same dollar amount, right?
Right.
But by having that wider stop, kind of gives you a little more room to accept the wiggle, if you will.
Okay. So like, let's hop in the DeLorean for a second. If you could go back, if you could go back in time, what would you tell yourself when you first started trading?
Don't be so scared. Right.
Right.
I think the biggest thing I had to get over was fear. It was fear of losing, fear of not being right, fear of
Missing out,
not being successful, fear of missing out, right?
Right.
That's a huge one as well, right?
Yeah.
But that's not something that you can just tell yourself, like jump back and and go tell your younger self. That's not something that you can just hear the words and it happens.
Right.
You have to build that experience to have that confidence to kind of get rid of that fear. Right. So I think everyone's going to have fear when they start, because it's fear of the unknown. Really, I don't know what I'm doing. I'm looking at this stuff for the first time, and I don't know what's going on. So that's where training, reading books, and screen time is really what's going to get rid of the fear. Just reading a book and telling you not to have fear is not going to let you not have fear. Right. For me anyways, what kind of got rid of the fear for me was experience
that created confidence.
Yes.
Interesting. So let's talk about what's one mistake. What's the one mistake that you see new traders making over and over again?
Trading too large and not having patience.
Indeed, man. I see that a lot as well, because you come into the game and you want to make money, and
right.
This industry is so filled with people talking about making money fast, just giving the wrong perceptions of it, and that was one objective of this podcast, is that I wanted to change the perspective to more of a realistic approach on the conversation about trading. Man, so we came to a section that I call my sniper questions, rapid fire questions. You just answer quick as you can off the top of your head, first thing that comes to mind. So, what is your go-to trading platform?
Right now I use Motive Wave.
Coffee or energy drinks?
Neither. I don't do caffeine.
So, what is the most underrated skill in trading?
Patience.
Favorite book on trading?
Best Loser Wins.
Do you trade with music or in silence?
Absolute silence.
Best stress reliever after a rough day?
So it used to be running was my biggest stress reliever. But now it's just kind of hanging out with the dogs, right? Just kind of
enjoying some moments of
taking
life.
their carefree attitude and just kind of absorbing it.
Nice. Man, RJ, I really appreciate you, bro. This was a lovely conversation, brother. Man.
Great.
I mean, the years of experience, you can hear it in your tone and everything that you're talking about. And it's definitely value that I can see our listeners getting some value from, man. I really appreciate you.
Well, thank you very much. And sorry about all the coughing.
It's all good, man. It happens. So guys, man, thanks for tuning in to the NOFOMO podcast, where we discuss keeping it cool and adapting to today's ever-changing markets. If you enjoyed the episode, make sure you hit like and subscribe and on that button so that you don't miss out on the future drops that we have coming. We've got plenty more insight coming your way. Until next time, stay focused, stay disciplined, and remember, when it comes to trading, the best way to be is to have no FOMO. Y'all be cool. I'll catch you on the next one.